Hello and a warm welcome. You've joined us on Midcap Masala on ET Now. You're joining us from our ET Now Suzlon studio. I'm Ashesha Advaryu and this is a show where we discuss all the mid-caps that are in focus today. But first up, let's take you through all the top headlines that we're tracking at this point in time. Chemplast Sanmar surges as investors cheer the removal of uncertainty around the Karaikal EDC plant. The company said that the Pondicherry Pollution Control Committee has ordered the unit to remain shut following the recent fire, while it continues to assess the extent of damage. The filing is seen as providing clarity after a series of regulatory objectives. The stock is up more than 5% on the back of this. Meanwhile, Gandhar Oil Refinery rallies in trade after reporting record quarterly performance, with profits surging sharply on the back of robust revenue growth. The company attributed the strong quarter to healthy demand trends across key end-user verticals, agile sourcing and a favorable product mix despite global uncertainty. The stock is up, locked an upper circuit of 20% on the back of very strong set of results that the company reported. Meanwhile, HEG gains in trade after delivering strong Q1 performance, with earnings boosted by healthy margin expansion. The company's operating performance exceeded expectations, supported by improved realizations and profitability. The stock is up more than 4.5% on the back of that. Shifting focus to the auto sector then, CIE Automotive slips despite reporting steady double-digit growth in revenue and profitability, as the results came slightly below street expectations. The company also announced the resignation of Rajendra Vadlapudi as the CEO of its iron casting division, while cautioning that geopolitical uncertainties continue to cloud the global outlook. The stock is down 8% on the back of this. And lastly, NTPC Green Energy advances in trade after reporting strong set of quarterly numbers, aided by robust operational performance and lower finance costs in the quarter gone by. The board has also approved the formation of a new subsidiary to develop renewable energy projects and increase its stake in a joint venture, reinforcing the company's long-term clean energy expansion plans. The stock is up a solid 9% in trade on the back of this. So yes, several mid-cap movers in trade today, but let's get going then. We have the management of Atlanta Electricals now joining us. Mr. Anand Sharma, CEO of Atlanta Electricals, has now joined us. Mr. Sharma, good morning. Ashesha this side, and thank you so much for taking your time out and joining us here on ET Now. And let's start with the numbers that you reported on a year-on-year basis. Very strong revenue growth of about 48% this quarter, and the order book position has also now crossed that 3,100 crore mark. You've also guided for about 40% growth over the next 3 years. Given the geopolitical uncertainty and uncertain times that we are living in now, how confident are you of achieving this 3-year roadmap that you've shared with your investors? Mr. Sharma, please unmute your mic.
Sorry. Thank you so much for having us here. We certainly have put up very good numbers on the quarter one of this particular year, and we continue to do so for the remaining year 27. Strong performance is driven by many factors, and first and foremost thing is the demand, which is coming from all quarters. And given the geopolitical situation which we are seeing, the thrust on the electrical energy segment or the non-fossil fuel based energy is going to increase only. And that is something which we have seen of late for last 3-4 months. The thrust has shifted to the electrical energy, may it be RE, thermal, hydro, etc. And we feel that this particular thing is going to continue. And as long as this shall continue, the transmission and distribution sector, wherein we are a fundamental part of that, we supply one particular very important element of the entire infrastructure, which is transformers. This is going to be the flavor of the game in coming time. So we are pretty confident that this momentum which we have gathered is going to continue for coming many years.
Okay, so the momentum is likely to continue and you're very confident of the growth outlook that you shared with your investors. And of course, the thrust on clean energy continues to remain positive for you. But if we look at the numbers on a sequential basis, we did see some bit of weakness. Was it fully attributable to seasonality or were there other factors at play?
I would call it to the seasonality. I would attribute it to the seasonality only. In India, if anywhere you see the quarter one is not comparable to the quarter four of the previous year. So that's the story everywhere. But if you compare our quarter one numbers of year 26 versus year 27, we possibly can see there we have registered a strong growth, and these numbers are going to continue for the rest of the year.
Positive momentum for the rest of the year. But let's also talk about raw material prices, because I believe they've remained elevated because of West Asia. One, how much have costs risen by? And two, how much of this has been passed on to the customers fully already?
We are blessed to have we have been following this strategy of having a major percentage of the utility orders, which comes with the price variation formula. And with the help of that price variation formula, whatever volatility comes in the market of the raw material or the commodity, we have been able to pass it to the customer. And this has been the case of late also. So I would say we are quite unaffected by the volatility of the commodity prices of late. And that should remain the case because our percentage of business which is coming from the utility remains unchanged, and we have not thought of any, let's say, change in the strategy of what we have been adopting till date.
Understood. Meanwhile, you've also given EBITDA margin guidance of about 16 to 16.5%, and you've also said that margins could trend towards 17 to 18% as operational scale further. How soon could you get to that 17 to 18% mark?
We are confident that, first of all, we are not expecting any major change in the EBITDA numbers in coming couple of years for sure. Why we say this, that we have put up a plant which is going to manufacture 400 kV. We have acquired a plant which is going to manufacture 765 kV. Now, these kV classes certainly do have, let's say, limited competition, and hence we are expecting the margin should be better. But it would not be fair on our part to predict anything. We have not manufactured 400 kV and 765 kV products till date. So it would not be right on our part to put any guesstimate on the table as to this is going to be the EBITDA numbers. But yes, given the supply and demand dynamics, we expect the margins in the 400 and 765 kV segment are going to be better. But again, we would be having the development cost for, let's say, producing or developing these products. So whatever additional EBITDA numbers or EBITDA margin we shall be earning, we hope that that will be set off by the developmental cost for next couple of years. Year after those, certainly, we certainly can expect that margins should improve from the levels where they are at the moment.
Okay, so margins will improve over a period of time, but in the short term, they are expected to largely remain steady. That's the word coming in. Yes. Meanwhile, let's also talk about exports then. And I believe you are targeting about 15% of your revenue to come in from exports over the next 3 years. Have you already started receiving export inquiries and order inflows?
In terms of we have not been doing exports. That's something which everybody knows. But why we were not doing, there were a couple of reasons. We were not having the capacity, spare capacity, I would say, for tapping the export market. But last year, with the addition of 2 new facilities, wherein we have quadrupled our capacities, we have started approaching overseas customers, and there is huge amount of requirement of transformer in the overseas market, be it the USA, Europe, Middle East, Africa, everywhere we see. So we have started talking to these customers, and since there is a real vacuum in the supply side of the transformers, we are receiving good amount of inquiries. But as we have been telling, let's say, our investors, that we want to move pretty cautiously. We do not want to jump onto every inquiry just like that. We would certainly be spending some amount evaluating these markets. And once we are sure that the customer we are going to align ourselves is going to be a long-term player, we shall start doing the business. So yes, we certainly would be seeing some, let's say, traction in this particular year. And in 3 years' time, we do have this objective of taking the export revenue to 15% of the overall revenue.
Understood. Let's also talk about competition from Chinese players. And is that having any impact on pricing at all? Now that Chinese players are also allowed to participate in PSU tenders, is competition a concern for you, either in terms of order inflows or in terms of pricing pressure?
See, this has been the talk of the town, I would say, for last couple of weeks. If we, let's say filter it down. So out of 4 players, there is only 1 player which is manufacturing transformers, and others are the switchgear players. So in terms of the capacity addition in the transformer manufacturing sector, we have seen many other MNCs and the domestic players adding capacity. So the Chinese player, which has been allowed of late, is going to be one more addition. And I don't feel, officially and personally, that there is going to be any thing which we should be worrying us, because the demand is more. Demand is there for everyone. There is no dearth of business for anybody in the market who is there at the moment or who possibly would be wanting to come in this particular market in a time to come. So since there is no shortage of the business, I don't see any pressure coming on the margins or the, let's say, business totality of the business revenue, etc.
So there is no dearth of demand, and despite Chinese players now entering the market, there is no concern with respect to demand. That's the word coming in. Mr. Sharma, yes, thank you so much for taking your time out and joining us here on ET Now, and we look forward to interacting with you more often here on ET Now. Thank you for joining us today.
Thank you so much. Thank you so very much. Good day.
On that note, we need to slip into a very short break. More news and updates will continue on the other side, and we'll touch base with the management of Paras Defence in just a bit. Welcome back. You're still tuned into ET Now, and you've joined us on ET Now Suzlon studio. And as promised, let's put the spotlight on Paras Defence now. And there has been several developments over here. The company has informed the exchanges that they've signed a memorandum of understanding with Madhya Pradesh to set up a 6,200 crore OSAT facility in Ujjain, and it's on the Ujjain-Indore corridor. To understand more about that and how will this start generating income for the company, we now have Mr. Amit Mahajan, Director at Paras Defence and Space Technologies Limited, now joining us. Sir, thank you so much for taking your time out, and let's start with the 6,200 crore facility that you have informed the exchanges about. What is the timeline for starting the construction of this facility and commercial production, and when will the company start generating revenue as a result of this?
Good morning. Firstly, thank you for having me on the show. This is very, very initial. This is the first step in line with what we want to do. So we have signed the MOU with the MP government, and we envisage that we will take about 2.5 years before the plant is commissioned and is ready for business. And over a period of time, it will start generating revenue. Say maybe about 3 years from now, it will start generating good amount of revenue.
2 to 2.5 years to construct the facility, and you will start generating revenue from the 3rd year. But any specific incentives that you have received from the Madhya Pradesh government under its semiconductor policy for this particular project of yours?
Yes, so the subsidies, the incentives are being worked out. Government of Madhya Pradesh moved very, very swiftly to get us on board. And not only they have allotted land for us, but also have a series of incentives for semiconductors, not only by the state, but also from the center. So it's a good initiative by the government. And we are hoping that this becomes our first entry into that state. And we aim to bring also defense and space beyond just semiconductors to Madhya Pradesh.
Mahajan, can you quantify how much incentives has the Madhya Pradesh government provided to you?
All of this is being worked out, and I don't want to put a figure there because it's subject to a lot of approvals and back and forth. But we will definitely come back with the numbers as to what kind of incentives we are expecting from the government.
So perhaps we'll interact with you once again to get more details on that. But what about the 6,200 crore investment that you are making? How will it be funded? Will it be fully via internal accruals, or will you have to take some more debt in order to fund this?
So the best part is government of Madhya Pradesh is doing what you say proactive incentivization of all the schemes, and it will be in a phased manner. So we are looking at building a first phase in the next 2.5 years, and then it will ramp up. All that you can see as the figure of investment will be phased over the next 3 to 5 years. And we are hoping that along with government support, we are able to raise enough funds for funding the particular venture.
Okay, so that's as far as funding is concerned. But in the first answer, Mr. Mahajan, you did tell us that you will start generating revenue from year 3. I understand it's perhaps premature to comment, but can you quantify what kind of revenue will this plant generate for you? And what will the return on investment be for this investment?
See, this is very, very initial stage. And I would like to mention that, it's subject to a lot of, the LOIs, the business, the partnerships that we make. And watch out for the upcoming news, because we will also be in the quest of making sure that we have the necessary customers for a facility like this. So we are now starting Paras Semiconductor starting full-fledged scouting for business and making sure that all these facilities that we will put up will also generate good amount of revenues and a sizable amount of profitability. We are going to go into value-added semiconductors, not just quantity, but also quality of very high-end advanced packaging.
Okay. Meanwhile, let's keep this aside and let's also talk about your business. How has demand been, and what is the order inflow and order book position at this point in time?
I have to tell you that we are in silent period, so I won't be able to give you an absolute figure. But the business has been very, very good. We are on target when it comes to all our guidances that we gave in the Q4 or beginning of this financial year. And this year, with all our ancillary initiatives like Paras Semiconductors, Paras Anti-Drone is also doing very good. And Paras Defense also has a sizable amount of business outlook in front of us.
Understood. Barring Paras Defense and semiconductors that you just spoke about, any other expansion plans that you're working on?
So I wouldn't call this as an expansion. This always was in our foray. What we are wanting to do is the amount of business that Paras Defense, Paras Anti-Drone already have on hand. We are wanting to make sure that we generate a long-term business out of this, such that the Paras Semiconductor automatically gets a lot of momentum from our existing business. And beyond that, we would also utilize Paras Semiconductors to make sure that Paras Defense's business, the indigenous content in it, is increased, because we would like to do critical semiconductors which we are using for defense and space, and high power embedded computing, which today we are catering to. So all of that, if we manufacture the critical component like semiconductors within Paras Semiconductors, we will be able to do more and more indigenous content in our existing platforms and existing systems.
Right. Mr. Mahajan, I understand you can't talk numbers, but directionally speaking, how has demand from export environment been?
Export has been better than the last year, and our position as a global defense manufacturing hub is increasing, enhancing, and this will definitely make sure that India is looked upon for a potent defense manufacturing partner for very many countries. And with this, the export demand is likely to go higher than what we see already.
Export demand is likely to go higher. That's the word coming in. Mr. Mahajan, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts not only on the 6,200 crore investment, but even on the business outlook, especially when it comes to exports. Thank you for taking your time out and joining us here today.
Always a pleasure.
And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side. Stay tuned.